Robert, your 40-year Gilt sale yesterday went quite well. What is that an indication of?
I think it's an indication of a number of different factors. First of all, the enduring strength of the domestic investor base that we have and demand in particular for long-dated gilts. I think it's also probably a little bit a sign of the fact that there is real demand at these low yield levels actually for our product, and of course it came arguably at the steepest part of the curve, so the optics perhaps also look good, and I think it's probably a result of the general flight to safety which we've seen, and gilts are viewed as part of the safe haven world in the current environment.
That will lead me to the next question. Do you get a sense that the recent flare-up of the debt crisis and the potential drag that it will have on Germany and France will boost demand for gilts? Do you think that's a part of the story?
I think to a certain extent, if you believe the safe haven theory, demand has already been boosted. I'm not totally sure to the extent that it will continue to be boosted, in the sense that I think the market has adjusted to the notion that one or two core bond markets are the ones that will outperform. That may indeed be sterling. That will also, though, probably be France and Germany, as you mentioned. So I think they could also be part of that. I think that what you see is the world has become divided between some very important, strong core government bond markets, of which gilts are definitely one, and some other markets which perhaps are not quite so, if you like, easy to trade in the current environment.
Okay, and you see, gilt issuance, correct me if I'm wrong, but I believe that gilt issuance have fallen in the past few years. A number of economists has forecast that in the major economies there will be a double-dip recession. How do you see the gilt issuance outlook against this environment?
Well, gilt issuance has come down from record very high levels. I should say that gilt issuance is still, certainly compared to historical levels, at a very high level. We're borrowing 167.5 billion, and historically that's obviously considerably higher than where we were just a few years ago. But you're right, it has declined. The forecasts that we use for gilt issuance now come from the Office for Budget Responsibility, and they are forecasting a decline in issuance, a gradual decline over the next few years, but they will still remain at relatively high levels compared to what we saw, let's say, just 10 or 15 years ago.
Is it your concern that there might be a surprise in the economy that might lead to record level again?
There can always be surprises, and I think it's in the nature of both markets and also economics that things don't always turn out exactly the way you expect. I would just say that sometimes those surprises can move in both directions, not just to the upside but also to the downside.
Okay, and what about these CPI-linked bonds? Can you give us a sneak preview of what you heard from the market so far? You seem to be concerned about market fragmentation. Does the market share your view on that?
Well, what we wanted to ascertain through the consultation was the extent to which issues such as fragmentation, it's not the only issue, would be of concern were we to issue CPI-linked bonds. And that's the reason why we asked some very specific questions around that topic. And we have got some quite interesting feedback. It's too early for me to say exactly what that feedback is, what the responses were, and what the government's response will be. That's ultimately a decision for ministers. But we have to now evaluate the significant number of respondents that we got and try and ascribe, if you like, a weighting to them and feed that into advice which we'll discuss with colleagues at the Treasury.
Okay. Last question. Against this forecast or speculation about slowdown in the economy, if that affects inflation, how will that affect your program in issuing inflation bonds?
It won't really. I mean, I think it's important to understand that our inflation-linked bond program is driven primarily by the needs of the investor base. So we've always tried to be responsive to demand, in particular in the long end, coming from the pension fund industry, who are the usual buyers of inflation-linked bonds. So the economic environment itself is not the primary driver of inflation-linked debt. It's also to do with, if you like, diversification of issuance, the need to have a good and diversified and varied portfolio as well.